joins us on the show. Mr. Vakil, thank you so much for taking time out and joining us this afternoon. You know, it has been a very interesting entire week thus far for the entire commodities complex, especially precious metals. But today, you do have that announcement in terms of those additional margins being rolled back. What are you looking at when it comes to this? Do you think that the dust has settled and this is, you know, a little bit of an appreciation, a cognizance of that entire dust settling right now?
The grotesque volatility recently seen in entire commodity space, especially bullion. Now it seems volatility is a little bit declining, and market is in consolidation form. So MCX has reduced the margin, which would give some liquidity support, and retail traders maybe get relieved because of less stringent margin requirements.
No, absolutely, and that's something that we're looking at in terms of what's really happened here with that rollback of the margins as well. Do you think that better times are in store for commodities traders, especially the ones that are looking at precious metals, because it's been quite the roller coaster ride for them? Do you think that the volatility from here on is going to recede just a tad bit?
Money or liquidity is always raw material for profit or wealth. So if it is available at a cheaper cost, it's a good thing. Uh, so far, bullion is concerned, we seem a little bit conducive environment in the face of Gulf risk, Middle East tensions between US and Iran. So I think overall it looks like path of least resistance to the upside. China market is closed, so there is no queue from other Asian markets, and especially China, which is largest in bullion trading. But hopefully, we may see return of rally or resumption of uptrend going forward, maybe from next one day.
And you know, when it comes to the bargain hunters, do you think that they're snapping up this sort of drop that we had coming in as far as gold is concerned? Do you think that is what is happening here? Or are you seeing strong fundamentals when it comes to both gold and silver right now?
The broader picture, like debasement story, hedge against dollar or hedge against fiat, is still very much intact. Technically speaking, 4800 or 4850 seems to be a very good support. Market is rejection that level. On the upside, we may see 5250, 5370. So near term range seems to be 4853. Uh, uh, though it looks volatile, but compared to previous weeks, still it is well contained.
No, no, absolutely. After that January route that we saw coming in, this is quite contained, Mr. Vakil, and that's something that we're looking at. But in terms of the near term, if somebody is already invested, be it through the physical commodity or through ETFs, what do you think that they should be doing? Should they be waiting for the dust to settle a little more, or should they actually be looking at some sort of a different strategy right now?
Gradually, those who miss the bus or maybe earlier spike, they may add exposure, or those who are not in the market may go for ETF on a scale down basis. I'm still sensing meaningful upside potential in gold ETF space, which is also a little bit less risky because of there is no margin.
No, well, absolutely, and that's something that we're looking at when it comes to the entire precious metals complex. But I quickly wanted to divert your attention to the entire Bitcoin space as well, because, you know, that's been in the spotlight right now. You've seen a little bit more of a pullback, and I remember that, you know, you had said that it's like catching a falling knife right now. I just want to try and understand if you retain the same outlook when it comes to the entire cryptocurrency space, especially Bitcoin. What are you looking at? Any price levels that you have in mind there?
There is sizable put option position in 40,000 strikes. So there may be general sell side crowding out, but at this level, I think market down move is little bit extended, overextended, I would rather say. So at this level, I would watch if market able to recapture 70, 72. We may see pullback towards 85, 87. And if market breaks key support area, that is 60 recent low, we may see further downside. But at this level, risk seems evenly spreads 50-50 to be or not to be kind of dilemma.
No, absolutely. To be or not to be invested in Bitcoin is really the question right now. And with those levels, those volatile, very choppy levels that you're looking at when it comes to Bitcoin, it's quite the catch-22 right now, quite the googly that the market is looking at. But I quickly wanted to, before we let you go, try and get a sense of what you think about copper. Do you think that people should be investing through copper futures if they want to get in on the entire FOMO side of it, or should they be looking at some of the listed plays? What kind of strategy and what kind of outlook do you suggest when it comes to copper?
Big picture is still supportive for copper. Yesterday we have seen nice rebound. I think a market is based around 12,000 in domestic term, and in LME basis, I think 12,500, 800 seems to be a good base. Going forward, we may see 1380, 1400 in domestic term. This is 4 to 6 week view, and in terms of LME copper, we may revisit 14,500 or above. Largely constructive and bullish view.
No, absolutely. And just wanted to get a sense before we very quickly sort of let you go. I just wanted to get a sense of what you're saying here in terms of copper. Should people, given the kind of volatility that we've seen of late, should they be looking at listed plays with a sharper focus? Or should they be looking at something like your copper futures and be willing to invest on that horizon as well?
There are two routes. Proxy route could be equity play in copper list related markets, or in leverage paid copper futures are good because we don't have copper ETFs. Any long side position should be protected with the purchase of put option as a part of risk mitigation.